Hello everyone. I'm going to talk about platinum here. I'll discuss some of the properties, some of the applications that platinum has, the rarity of platinum, look at some historical charts for platinum to get a sense of the price, and we'll see what platinum could potentially do in the near term and also in the medium term. So in terms of properties, if you look at different precious metals that we have available, platinum kind of stands out compared to the others. One of the main reasons that it stands out is because of its density. So all of these three coins are 1 ounce coins, meaning they are 31.1 grams each, but they have different sizes. And this lies in the fact that platinum is probably one of the most dense metals on Earth, with a density of around 21 grams per cubic centimeter. Gold is almost as dense, but not quite. It's 19 grams per cubic centimeter. And if you put them on top of each other, the difference is not as much to show here. Maybe this platinum coin is a bit thinner and the diameter is a bit smaller to accommodate for the difference in density. But this difference becomes extremely prominent if you look at the same mint for silver versus platinum. Both have the same weight, which is 1 troy ounce, but as the density of platinum, 21 grams per cubic centimeter, is much higher, almost double that of silver, which is around 10 grams per cubic centimeter. To accommodate for the difference in density and maintain the same weight, the volume of silver should be double. So that's probably why the diameter is bigger, almost to a factor of 1.4, and potentially the silver coin is a bit thicker as well. It might not be visible, but that is the case. So that's the main property. And also, if you lift up a platinum coin, it feels much heavier than the others if you lift up a silver coin. And the difference is because of its higher density, it exerts more pressure, especially if you put it on your palm. That would be less surface area, more pressure, so it would feel denser than a corresponding same weight silver coin. So these are some of the visual and physical properties. If you look at the applications of platinum, it's mostly used in catalytic converters in internal combustion engines or fuel-based cars, heavy machinery, trucks. So pretty much the process that goes on here is platinum is used as a catalyst that turns carbon monoxide, which is extremely toxic, and also unburnt hydrocarbons, which are not burnt during the combustion process, to produce carbon dioxide, which naturally occurs in the atmosphere and is kind of inert, and H2O or water. So this is the basic type two-way catalytic conversion. One argument against the demand for platinum could be, okay, we're going green. There won't be as many fuel-based and hydrocarbon-based vehicles in the future, in the coming decade. So the use case of catalytic conversion was going to become obsolete. There's two things to consider. I remember when I was 5 years old, I was constantly told that fossil fuels are going to run out in the next 20 years. We're going to have zero fossil fuels. They are limited resources. And the next year, they made the same projection, but instead of adjusting it, it's going to go obsolete and we're going to run out of fossil fuels in 19 years. They kept just pushing the same 20 years, until I guess in 2015, where crude oil price dropped to around $20 per barrel, where they said it's going to run out in 40 years now. And still, the same talking points has been thrown around. So I would potentially think of platinum or internal combustion engines as potentially the same thing, because it's highly unlikely to find enough lithium to create lithium batteries for electric cars or completely electric cars. And to kind of argue that in the next decade or in the next 5 years, all the internal combustion engines are going to go obsolete and nobody is going to buy them. Everyone's going to buy electric cars, and that seems highly unlikely. Also, another use case for platinum is creation of a new green clean type of energy or fuel, which is called the hydrogen fuel. And this is pretty interesting. Green hydrogen could address 15% of world demand. So this is a 2020 article that talks about hydrogen being used as a type of fuel. And this seems very interesting because hydrogen, or H2, the molecule of hydrogen, if it's exposed to oxygen, which is present in the air, it'll produce water. And this oxidation of the hydrogen molecule produces a lot of energy. But the problem right now is, naturally, H2, or the hydrogen molecule, is extremely rare and is very unstable, because as soon as it's exposed to oxygen, it'll turn into water. So right now, platinum is used as a catalyst in the electrolysis process, which is the process of turning water, H2O, into a hydrogen molecule, H2, and an O2 molecule, oxygen. And the H2 will be used as the fuel. And this fuel, when it's quote-unquote burnt, will be turned into water. So there's no carbon to produce CO2. Therefore, it's called a type of green fuel. Of course, a lot of articles criticize platinum as being too expensive to be used in this process. There's been recent developments of using alloys of platinum with less expensive metals and also alkalines. But still, this is an application which requires platinum or a combination of platinum and other material to produce hydrogen as a fuel. So the demand could potentially rise for this type of fuel. Now, rarity is an interesting property of platinum because if you look at the different types of data from different sources, it gives you different numbers. Some claim that platinum is much rarer even than gold. One article I found from Royal Mint is that it's not more rare, but for gold we have 4 parts per 1 billion parts of the Earth's crust. Of course, it's not uniformly and homogeneously distributed. It's just saying that for every 1 billion, let's say, tons of Earth's crust, you'll find 1 ton of gold. And platinum is a bit less rare, 5 parts per billion. Of course, silver is 75, much more common than these two metals. Another one is osmium, which is the densest metal, the density of, I believe, 23 grams per cubic centimeter. It is 1.5 parts per billion. And another metal which is really interesting called rhodium, which I'm going to discuss later, but rhodium is probably one of the rarest metals. The rarity of rhodium is almost 0.2 parts per billion. So let's say gold is 40 times more common than rhodium. So it's one of the rarest metals. So keep that in mind, and I'm going to come back to rhodium later. It's also another metal that's used in catalytic converters, usually in combination with platinum or palladium, and it's mostly used for 3-way catalytic conversion to not only deal with carbon monoxide but also with NOx, or different oxides of nitrogen. So going back to platinum, there's also the geopolitical problem in producing platinum because most of the platinum in the world is concentrated in South Africa, with the rest being in Zimbabwe and Russia, and some being in North America. So probably out of 7,000 tons of platinum produced each year, around 4,000 tons are produced in South Africa. So that creates a huge risk of this metal being concentrated in one specific region in the world that could make it even more difficult to mine and affect the supply side. Now let's look at some of the transactions for platinum, for physical platinum and platinum contracts. And for that, let's look at the CME Group's reports on the platinum contracts. One thing to take note here is we're looking at the futures contracts, of course, but just looking at the futures contracts, and each contract's being 50 troy ounces. Keeping that in mind, let's have a look at the volume and open interest. Starting from the beginning of December 2022 all the way to mid-January 23. As you can see, the light cyan line is kind of flat, which shows the open interest is constant or is being carried over, which we're gonna discuss later. So open interest is around 68 to 73,000. Now this is the contract size. So if we want to calculate 73,000, let's take the bottom, 68,000 contracts of 50 ounces, that's 3.4 million ounces of platinum. And if you look at the supply side, the total supply of platinum in 2022 was around 7 million troy ounces. So that's a huge proportion of the supply of platinum being traded just in December and January. At least there's open interest for it. And one thing you can note here, if you go back to the data, historical data from December, a lot of the open interests were for January or for February. But right now, as of January 2023, it seems like it's being pushed forward into April, and most of it is concentrated here. If you look at the open interest at the close, you can see 69,000 troy ounces of platinum are due in April 2023. And it seems like, of course, April is like a while away from now. It seems like due to lack of physical stockpile of platinum, is being pushed into the next month or next delivery date, which is July. And you can see like every day the change is like around 200 contracts being reduced from the April delivery all the way to July delivery. 200 subtracted, 200 added. It seems like it's getting pushed forward into the future. And the ones that are being sort of resolved is in the EFP category. The keyword here is exchange of a futures position for a cash position. So the big players here, JP Morgan Chase, HSBC Bank, they are telling the potential institutions, companies that are producing cars, they need platinum for their internal combustion engines. They're telling them, okay, your contract has expired, but we don't have the platinum. We'll give you cash equivalent of that in exchange. So that's one interesting factor about platinum, is that open interest is being pushed forward in time. And also, some of the deliveries are done in P&T, or privately negotiated trades, in which a supplier, let's say a JP Morgan Chase, goes to the person or a legal entity that has the contract and says, okay, let's take it elsewhere. Let's do it outside of the exchange. So 180 in April has been, dealt with outside of the New York Mercantile Exchange. So this is very interesting in terms of how the trading is being done. Now, to get a sense of what this number, this open interest for April delivery of platinum tells us, is looking at New York Mercantile Exchange. It shows that in total registered platinum combined with eligible to be registered later, combined total is 196,000 troy ounces. And as of the 12th of January 2023, there's been no amount received, withdrawn, and net change is also zero, which is also interesting. So no trades in platinum has been made. Potentially could trace it back to late December, which a few amounts of these contracts were actually withdrawn from different vaults, be it the JP Morgan Chase Bank or HSBC Bank. We have a lot of orders, of course, a lot of open interest, but the actual amount that's being withdrawn and received is very small, if not zero. And if you look at the amount available as of today, it's 196,000 troy ounces. But the calculation we did, which was the total open interest that closed, 69,000 contracts, which we again multiply by 50, which is the size of the contract, you get 3.4 million troy ounces. So this is astronomically bigger than the 197, I believe, 1,000. This is 17 times the amount we have in the vault available in stock. So just looking at that, if all the open interest asks for their platinum that they're buying, instead of rolling it over for the next delivery date in July, and then October, and then January 2024, if they all of them said, no, I want my platinum, I don't want to exchange it for cash, I don't want to cash outside or do anything behind the doors, well, there's 17 times more demand for physical platinum right now for April as we have available in NYMEX. That's why a lot of people are calling it a platinum short squeeze, and it's gonna bring the price extremely high. So this is the trading side in the futures market. Now let's look at some of the interesting charts here. The one I found very interesting was, of course, the price of platinum. My chart shows from 1997 all the way to the current price. The price peaked at February 2008. It was before the financial crisis and dropped significantly from around $2,000 to $600 per ounce. Since then, it's not made a new high. It's been going down, making another lower low in February 2020, and now it's kind of developing a bullish flag pattern. But what's interesting is, first off, platinum has always been called the white gold, of course, because of its rarity properties, which is pretty similar to gold as a store of value, as used for jewelry. A lot of people use it to have a white type of gold. And also, as far as I remember, the price of platinum has been higher than gold. So this is the more expensive gold as well. But not the case anymore, because if you look at the ratio of platinum price to gold price, you can see historically it was traded above this parity line, this blue line, which is price of platinum 101 with price of gold. So historically, at least as far as my chart can take me back, it's been traded above all the way to 2.4 times the price of gold. But then after the drop in 2008, of course, it touched the parity line and then went back up and then broke it. And it's interesting that it's kind of reacting to this parity line. Since it broke down, it's been going back and up, but then it fell all the way down to this point in time, which is currently trading at almost half of the price of gold. In early 2020, it went to only 40% of the price of gold. Why this thing happened, that this more precious than gold turned into not even half the price of gold. But we can look at the patterns, and if we kind of believe in reversion to mean, we can potentially see some upside going back to 101 or even higher, especially in the supply and demand side, as you saw in NYMEX, which is somewhat nightmarish, how all the contracts are being pushed forward in time, or instead of the physical platinum, they are delivering, only giving them cash to close their order. So this kind of the squeeze in the platinum vaults could potentially bring it up. Also, the industrial demand for internal combustion engines after the lockdowns, now companies would potentially produce more cars at a faster rate. If you look at the actual platinum price, it took a huge hit. After 2019's lockdowns in 2020, it went really down, and that could be attributed to the decrease in demand. So this chart, the platinum over gold chart, is really interesting. So if it goes back to the historical parity, or even breaks above that, you can expect the gain in platinum to be much higher than the gain in gold. Gold is making news these days because of its price making new all-time highs. If you look at the weekly chart, around July 2020, it made a new all-time high, around 2064, and it seems like it's going back up to break that high. But platinum is still sitting in that bearish market. Now let's have a look at the price of platinum. We see two movements here. If we do an Elliott wave analysis, well, this is of course in a huge super cycle. This is wave number 1. And if you consider this one the end of your wave, this is wave number 2. And wave number 3 and 4 and 5 is going to be somewhere up there, of course. We expect wave 5 to be very aggressive, so we have to look at the logarithmic scale. So the least a wave 3 in Elliott wave analysis is going to do is to break the previous high, all-time high, which is 2,291. Now, an interesting development is in the correction wave, of course. If you look at this one and say, okay, this is A, B, and C. And of course, look at the C wave as an impulsive move and zoom in a bit to see what's going on here. We can see the end of the C wave, which is here, around $580. Was following this trend line, give or take, made a new low, fake out, and bearish overlapping wave, and then the final fake out. So this is how most of the bottoms are made. Drop really fast in a short period of time and then go back up, and of course that would be the start of the next bullish cycle. So this is the first thing. And if also you go to the historical platinum gold ratio that I showed you here and have a look at this bearish trend in the ratio platinum to gold. So once it broke below parity and then traded below parity, if you look at this line as the first correction and this one as the C wave of this correction, we can see this is kind of observing this trend line pretty closely until it breaks out of it at this point. And it doesn't go down as impulsive as it went up. So it seems like This one is an impulsive move. This is a correction. It's kind of reacting to this trend line when it's going down, and it's showing some resistance here as well. So this is another signal that could potentially see a rise in the platinum gold ratio. So the next one could potentially go above parity. But also going from the weekly chart, if we assume this is the first wave and the A, B, C is done, the correction is done, this is the fake out, this is the bottom, and we can have a look at the price chart here and say, all right, if this is the start of a third wave in a bullish cycle, this could be the first wave and this is the second wave. Of course, the third wave would be much, much higher outside the scope of my chart. But if this is wave one and this is wave two, let me name it differently. Say this is a intermediate cycle. So within that wave, of course, we have the correction, and the correction seems to be A, B, and C. So if I switch to the daily chart so we can see the intermediate wave more clearly, this is our wave one, the impulse. This is A, B, and C, the correction at the end of wave two. So there are two things that could happen. It could be a 5-wave correction, which means the price is going to go down like a new low. Or if this is the ultimate correction and the ending of the wave two, we can draw a trend line here and see what's going on. So it does seem like this is an ABC. If we want to verify that, we can easily draw a Fibonacci extension. Of course, we're looking at 101 movement. It made less than one time the first impulse. So it kind of shows the overlapping correction here, and it broke above the trend line here. And of course, it's coming back to retouch it. Of course, if you look at day by day price action, you can see it went down, touched the trend line, went back up, and now it's going kind of sideways. So this is the price of that. Also, rarity is an interesting property because a lot of people say rarity doesn't necessarily translate into price. And this is a valid philosophical and economic type of reasoning. Platinum is rare, is concentrated geographically, heavily concentrated, but it doesn't mean that the price or the metal is more valuable than gold or nickel or any other metal that you want to name. But let's go back to conversation about rhodium. Even though it's an industrial metal, it's extremely rare, it's one of the rarest elements or metals on Earth. That was the talking point. But people used to say not long ago, starting from 2012, 2013, the price was trading at $1,000. And then in 2015 and 2016, it went down to $660. Something happened around 2018 and 2019, which brought the price up to $2,000, from $600 to $2,000. 3 to 4 times increase in price. And that was just the beginning. In 2020, which you could argue it was still in lockdown and there was not much manufacturing going on, the price shot up to $13,800 per troy ounce of rhodium. Then it seemingly made a small correction and then shot up all the way to around $29,000 per troy ounce, which is really interesting. It looks like one of these cryptocurrency tokens charts. The only thing is that even after it kind of crashed, the price still really higher than it used to be, $12,000 per troy ounce. So going from $600 in 2016 all the way to $29,000, that's almost, how much would that be? It's like 50 times increase. And then right now it's trading at $12,000. So if you had some rhodium and you bought it at $600 and nobody was thinking about that, now it is 20 times more expensive, $12,000. And this goes to show you, well, famous adage, the market factors in all the information about a given financial instrument might not be the wisest thing to say. And we could even argue that what we saw in 2019, 2020, and then peaked at 2021 with rhodium, which is kind of sustained. Of course, when prices go up, they enter a bubble zone. And of course, they go back to where the actual value of the thing is. So the actual value is $12,000 per ounce. So when it was trading around $500, $600 per ounce, it was extremely underpriced. And you could make the same case with platinum because, of course, platinum is not as rare as rhodium, but it is used in conjunction with rhodium in catalytic converters. It has potential in green H2 fuels, hydrogen fuels. And also the chart is very interesting, especially the parity chart that we saw here is very interesting because it's been trading for quite a while, and it seems like we broke out of a bearish trend and we're touching it on the upside, and this could potentially break the parity with gold as well. So if we have positive outlooks on gold, which I do, I will be even more positive about platinum here. And that's pretty much it. Thank you.